Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody, and welcome to that CPI report. Hey, you know what? This report could be everything, but you got to remember, every time that the market gets really focused on a report like this, sometimes the report just comes out like expected, and I don't know, like the conclusion out of it is like really confusing, right? The markets are freaking, yeah. Bitcoin's on fire. Does that mean they're doing good? I mean, it looks like Bitcoin is doing okay this morning. Let's just go through the charts here real quick. I want to talk about the setup we've got going here. All right, so S&P 500, decent recovery yesterday. Another one of those sell on the opens and then big recoveries, right? Treasuries, the same sort of a thing. The treasuries, they started out bearish, and then, after we're done, they go bullish and they recover. All right. I don't want to note, but again, like in the 30-year, they've backed off a little bit on the flattening, but in the 2s and 10s, they've been flattening the past few days. All right. Now, the big one, the one that really popped off yesterday was oil. Look at this, man. Just absolutely nuts, from 79 to 81. And now here in the overnight session, 82. I am quite pleased with my oil trade that I took. I'm glad that I didn't give up on it. Hey, oil just looks nuts. Okay. Remember back here when we lost all this money? Too bad we didn't have that. If we had just been able to buy along there, it would have been like $7,000. Okay. Oh, wait, we're not done over there. Natural gas. Natural gas is getting a little, I don't know, guys, like it's breaking out of that range. That's not good for Europe or inflation, right? Gold and silver taking a little bit of a rise yesterday, maybe ahead of the CPI report. We'll see, but I don't know. They've done this many times and then just got smacked back down, right? And coming over here into the currencies, let's just check the dollar here first. The dollar weakening a little bit. All right, getting back below 95.5. And then Bitcoin here, you can see, since piercing that 40K level a few days ago, up to 43. So if you bought that dip, you're probably pretty happy right now. Let's just remember, though, that it would not take much. To get them below 40K. But I kind of suspect that regardless of what it's supposed to do or what the CPI comes out as, that Bitcoins will try and buy off of this. They often do this. Is like big news. We got to make sure that Bitcoin buys off of big news, right? Okay, so here's the setup here, guys. You're gonna remember CPI. This is like the most anticipated CPI I have ever seen. When was it that the administration was literally giving their projections on the CPI? Now, the administration, here's what I think is going on. The administration was saying, well, we think it's going to come in hot and car sales are going to be really high, but the rest of it is probably going to be fine. I think that what they're doing is they're trying to pump up expectations so that if it comes out in line, that, people chill out. And I think that may be what happens. I think that the estimates in this instance are probably pretty good. So remember, well, it's kind of changed down a little bit. US CPI, core CPI, month over month, spot 5. That's what we're looking for, all right? US core CPI. Remember, the regular CPI number probably not going to be as useful because oil has been moving so crazy. But that core CPI, spot 5. It was spot 5 last month. So if all of the estimates are in line and everything, it's fine. If it's high, we need to go back and look at the report, because if it's just because of autos, that's not really a big deal. But it does sound like that food and energy is going to be like high. All right. So just keep that in mind. If this number is low, look out. Like these instruments are going to rally so hard if it ends up being low. Okay, so that's the case that we really need to worry about. If it's high, I think that we probably need to do a little bit more investigation, but I think that the most likely case is that it comes out in line. And if it comes out in line, then we're going to need to go and look into the report. But either way that this goes, just remember, there is probably going to be a lot of excessive volatility off of this. I'm not going to take a position here on this. Okay. It's going to be crazy. But if it's in line, maybe there's a bunch of craziness and confusion, and then we just kind of end up back in the middle, and everybody's like, what just happened? Could be confusing. Okay. Now that said, it kind of looks like the treasuries are kind of selling here. Well, I guess they had a little bit of a rise over over the last 30 minutes or so. You're still holding your Bitcoin short from the break of 40K? Oh, dude. Wow. I mean, being short into it breaking 40K was probably good, but at that point, you probably should have taken it off, right? Because Bitcoin will you're not following me on TikTok. That's a problem, bro. Dude, when they get hyper focused on a level like 40K, Bitcoin will always screw with it. It will always screw with it. It has no real predictive value longer term as to whether we bounce here or we go back to 40K or anything like that. But I can tell you, they're going to go and touch that 40K and they're going to try and set off stops, right? And then bounce. So if I was short on like any kind of a leverage trade or anything, I probably would be taking profits there, waiting for it to come back. And then if I still believe in the short, getting in again, right? You liked the video on spoofing? Thank you. I've got the next video recorded, and I'm giving myself the week to edit that one. Yeah, that you're gonna hold for the inevitable drop to 20K. Oy. Oh, I can only hope. It could be the case that this is where it gets weird, because if inflation comes in hot here, treasuries are probably going to sell, the interest rates are probably going to rise, and that would be a negative for Bitcoin. But in the short term, I wouldn't be surprised if Bitcoin rises, because people think that it's a hedge against inflation when it really doesn't. So yeah, Bitcoin could do something nonsensical here. I think it's quite likely to do that. Like, there's this, I gotta tell you, there's a lot of manipulation in the Bitcoin market, all right? And there are these big fish over there sitting there being like, well, everybody's looking for this big piece of news. We want Bitcoin to move off of it, and they always make Bitcoin move positively. It's kind of funny, actually. Why don't you like Bitcoin? Well, Bitcoin as it was originally envisioned, I think has some really big flaws in it. It cannot be used as a basis for an economy. And I think that a lot of people have ideas about it that are false. I'm not opposed to making money off of a speculative instrument, right? But then the other issue is that there is like some serious fraud and manipulation going on in the cryptocurrency market. Like, it literally shouldn't be even like half of what it is right now. And it's only able to be there because of Tether. All right, so here we're gonna get the news here in 15 seconds. Here, everybody's polled. And my hands off. I don't want to be tempted. Okay, so I see the treasuries move a little bit. Okay, core was spot 6. Core was spot 6. Okay, so you can see they're shifting around. They're not sure. Let's see if we can get the latest release. Okay, cool. We clicked on it before it got hugged to death. I'm going to go through the report. Increases in indexes for shelter and for used cars and trucks were the largest contributors to the seasonally adjusted all items increase. The food index also contributed, although it increased less than in recent months, rising spot 5% in December. The energy index declined in December, ending a long series of increases. It fell spot 4% as the indexes for gasoline and natural gas both decreased. So that alone is something that we were not necessarily that the market was not necessarily expecting, and that's why the interest rates are rising right now. Okay, the housing number increased more. Remember, there were all this time that we were like, is housing ever going to come up? Because how can the cost of houses be going up but the rent not be? Well, now you're seeing some of it, and that was probably why we were spot 6 instead of spot 5. Okay. The all items index rose 7% for the 12 months ending December, the largest 12-month increase since the period ending June 1982. The all items less food and energy index rose 5.5%, the largest 12-month change since the period ending 1991. The energy index rose 29.3% over the last year, and the food index increased 6.3%. Okay, and there you can see, here's our numbers, right? So food did increase, but not as much. So that is good. That was kind of what they were saying when they were like, maybe we're over the worst of it. Okay, energy was a big contributor last time around, and this time it decreased. Although we got to remember that energy has come back up since then, so you gotta discount that one. All items less food and energy was spot 6. Okay, new vehicles 1%. Used cars and trucks, 3%. Apparel, 1.7. Okay. Oh, so that's okay. Services, less energy services. That was only spot 3. Shelter, spot 4. Medical care. Okay. So this is actually not a terrible report. Okay, so on this report, does this increase or decrease the chances of 4 interest rate rises this year is the real question for us in the treasuries. And on this one, I'm not so sure. It kind of, there's hints that we're getting things under control and that in the next few months that we could see these inflation numbers chill out. And then, but even if the numbers chill out, I think that the Federal Reserve would like to get to a more normal interest rate. So, I don't know if that means 3 or 4. I don't know if that means 3 or 4. Definitely at this point, though, I think it's almost a given that they're going to raise in March, right? They're going to raise in March. I can see Bitcoin moving up just a tad, but not a whole lot. It doesn't look like they're really paying attention over there. The S&P 500 buying here. I think that I'm not so sure in the treasuries what I want to do here because this could just be really messy and confusing. But in the S&P 500, hey, why not? Let's put one on here. And for you guys, let's go and update our levels. How long have you been trading and how profitable are you? I'm a beginner and I want to learn from the right people. Okay, Bess. So Um, my approach to this, I'm going to tell you something that is completely contrary to what almost anybody else in the industry is gonna tell you, but I think you will see why this really matters. Okay, uh, past performance is not indicative of future results. If you run into a person and they've been trading really, really well over the past year, say they beat the S&P 500 over the past year, guess what? A monkey can do that. If you go to Graham Stephan's channel, he's got a video where he had a monkey pick a bunch of stocks and they beat the S&P 500, right? Now doing it over a 5-year period is really difficult. You can get somebody to show you a 5-year period of intraday trading. So they're scalping their day trading profitable for 5 years. That would be amazing. I've never seen it. I've literally never seen it. Day trading is super crazy hard. Okay. So I have a couple of videos on this. I have a video that I released just recently that was watch this before you start day trading. It is basically like day trading is hard. You're probably going to lose money. Are you sure that this is for you? Okay. So if we get to that point, yes, I am sure it's for me. Yes, I do know that I might lose money, but I still want to do it. Then the next thing is use empirical evidence for your learning. Okay. So you go and learn things that can be proven. Okay. A really good source for proven information, or my favorite is Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Beauchamp. And this is a very thorough introduction to everything we know through scholarly research about market microstructure. That is the stylized behaviors that markets have a proven tendency to show. Okay. That is empirical evidence. That is proven stuff. And the problem with a lot of that studies is that it doesn't necessarily tell you how you should trade or set up entries off of it. But I think that you will find if you really look at things and you put all of that knowledge to work, that you will start to see those behaviors in markets and you'll start thinking of ways to try and take advantage of it. Okay. So don't go and look for the person that has the most money. I lost money last year. I was doing really, really good until I made that stupid oil trade, and then I blew it. Okay, but don't look for that person. Look for the person that's going to give you empirical evidence, right? Because what's going to hurt you the most is learning a bunch of things that just aren't so. The madness of crowds. There you go. That's what really hurts retail traders, I think. Is that we get all of these ideas about the way that markets behave that aren't really empirically backed. Okay, a lot of them have to do with technical analysis. All right, most of the things that retail traders look at, they do not have enough samples to prove a real statistically significant edge. Usually you need like tens of thousands, hundreds of thousands of samples to prove this sort of a thing. So because because all of the things that happen in markets have fat tails. Okay, so the S&P 500, pretty easy bull run. Treasuries are pushing their highs. I'd say it's relatively tame. We could consider going short rates, but I'm still a little weary about all sorts of weird things happening over here in the treasuries. So I'm just gonna kind of watch it for a little bit. Okay. But so for me, I have been trading for, well, I've been watching markets since 2008, but I've been trading futures for 4 or 5 years, right? And we were doing really good last year until I made a dumb trade. So I think that the methods that we've got have a decent amount of effectiveness. It's always going to be really hard, but the thing that's different here is that we have information that is proven and that we know affects markets. It's not what people typically think of. Okay, so here's this big order at 18.5 that they're going to go for. One of the key things that we have found is that markets are more statistically efficient than they are informationally efficient. So that means we want to trade off of news, economic reports, information. We want to search for situations where there's an informational asymmetry. A bunch of people in the market believe something that we know is not so, right? And I almost completely ignore technicals, right? So that's what makes this channel different. The other thing that makes this channel different is that we watch order flow, so we got a DOM up. I don't think that anybody else out there is showing full depth of market for a bunch of instruments like we are. And we trade bonds. I don't think anybody else out there trades the bonds. So, and you gotta know your stuff for on the economy when it comes to bonds. Man, well, I should have gotten short at 1.745. That would have been a good trade, wasn't it? They pretty good stop run. They did trade the 20. I want to see, because it was such a large order, I want to see what happens there. Just note at 20.5, you see how they're kind of putting up low liquidity. There's a little bit of pulling in that area. So that means that we're kind of in a tricky zone. If we want to get long, I probably, well, okay, maybe not. There's a lot trading at 22 as well. I'm torn between whether this is a situation where we can be aggressive and go with the market orders at 22, or if this is a situation where there's going to be a lot of pulling still and that we really need to make sure we get a good position. We should also be cautious. People could overreact to this news, right? Like the news that we just got, it wasn't particularly great, was it? Wasn't particularly great, but okay, so there we go. So that is what I was worried about. Right there, pulled down two ticks. Yeah, don't want to mess with that. All we do is lose money. Don't even do it. I don't. I gotta say, there is real value in day trading. My stock portfolio has been doing so well. I don't touch it. I don't day trade in that portfolio, but it is very much, my allocation is very much informed by what is going on in my day trading, right? What I've learned from my day trading and watching the markets helps me set my asset allocations. And yesterday, my stock portfolio was up 4.25%. I was really, it was really a good day for me yesterday on my stock portfolio. You were 5 contracts into that move, long on the NASDAQ. Oh, nice. That's a 4K winner for you, man. Good job. That was a demo still, right? Yeah. Oh, it says demo. Still. Man, 5 contracts long on NASDAQ. That's funny. Did you hold it through the news? Did you hold it through the news? I mean, when you look at this here, with what we were saying before and how I was saying, I think that the administration is trying to raise people's expectations so that when it comes out in line that they're all relieved. Kind of looks like that's what happened. And that's what happened the last few reports anyways, was that everybody was really concerned that the CPI could be super hot, and then it's in line. So the report is not necessarily good. In fact, I would say that it's even more inflation in some areas than the market expected, but because it wasn't crazy bad, everybody's relieved, right? It's funny. Actually, you know what this is a case of? Expectations are meant to be lowered. There you go. You've missed out. I don't know if you've missed that much. Not too much happened yesterday, Gus. Oh man, you've been sick. Did you catch the Rona or something else? I tell you what, I've had a couple of friends in family getting sick, and it wasn't COVID, but they got super sick. Yeah, it's not Rona.
Block
That would,
buy.
ooh, 3K buy at 21. Hmm. Now that the context around that particular big order is very interesting to me, because normally you get a big order like that, like if it happened up at the highs, that would be kind of weird, or that would be like, oh, maybe somebody is stopping out, something like that. Here in this situation, they really pushed up and then came back hard, and now somebody bought it hard at 21. That could be a sign that they're going to try and push up here. But in this particular context, if I'm a big trader, I don't want to put a big out order out there that everybody sees. That could be something that gets us stuck at 21. You see, it didn't tick up, and now 20 half is pulling. And I bet you that they could play the game there. That could tick down, tick back up, and then yeah, this could tick back up easily, and then this could tick back down. Yeah, you don't want to put a big order out like that. That had to have been a mistake, unless they needed to buy and they were just going to buy the rest of it there or something. But that could be something that we would be like, oh, we want to trade off of. That's actually, for me, I want to avoid that area now. I'm now thinking maybe if they come back, I don't know how far they come back. Maybe they come back all the way back to 16. Maybe they come all the way back to the open, and then we could try taking a short on the rates again, possibly. Oh, we got to keep an eye over here on this MES. Well, I got a good trade to begin with. Do I want to swing that one? I think that I am going to scratch that. I'm going to count that as a scratch and just kind of... FTH says that's hedging with equities. Yeah, we could do that. That is definitely something that I should probably consider more of, is only trading the equity indexes when I want to hedge myself and keep my larger portfolio the bigger thing. Certainly a way to do it. I gotta tell you though, I'm really quite interested in, now at least. I've always been scalping. Like, here's the thing that I've kind of come to, or kind of part of where my head is going is, okay, we've been day trading and we've been scalping, and we really focused on like the market making kind of side of things, and for a long time. And then more recently, over the past year, we've become more and more a speculator, and we've learned a lot. And I've always been told that, like, you'll make some money day trading, and then the more money that you make, the more you're going to want to size up. That's what people's tendency is that they size up. And I'm looking at this and I'm like, well, I don't think that you're ever going to build a fortune scalping. You can build a fortune speculating, but you got to have a good amount of money and the ability to take on risk first. Like in this particular instance, like I think that account was $1,500 is not enough. $1,500 is not enough. Maybe $15,000 would be enough to speculate and really make some good trades with it, right? Because you got to have the ability to lose $1,000 here and there. But I also feel though that like we've gotten pretty good at this. I feel like we've learned a lot, and sometimes I just make dismal trades, and I think that part of that is just that the strategy that we're doing, you're taking on a lot of risk, and so you're going to get those clusters where you just do poorly. But overall, I think that we're a lot better at this than I maybe initially realized. And it probably does behoove me to think about going bigger, right? And going for higher time frame things now. Since it seems that we really learned what it was that we want. I'm sure there's lots that I don't know that I don't know that I know, but I think that those things about the market microstructure that we've learned and how the market making robots work, I think are really, really key insights that um, maybe we can graduate from those. So I'm more and more interested in going for the bigger things. And when you look in our space, the futures trading space, what is like the next step up or the bigger one? And that's where you get into the hedgers and the CTAs and commodity funds and whatnot. And I guess I don't know if those are all different names for the same thing or what, but I'm much more interested now in like how do CTAs do their thing, right? And I think that that means that we're probably going to need to be doing a lot more back testing on higher time frames, which we've always been short time frame things. Now let's try and do them on higher time frames. That might mean that we need better data, because in order to get a statistically significant result, we're going to have to look back over a really long time period, right? And hey, it might mean working for somebody else. But I'm starting to look into that and trying to learn more about that side of the industry. That's kind of where my own personal interests have kind of started to go. Because like we're Goldman Sachs, the analyst at Goldman Sachs on commodities, he thinks that we are at the beginning of a commodities super cycle. And if we're raising rates in a raising interest rate environment, those materials can do really, really well. And commodities for a long time haven't been the hottest thing. But so I think that he probably, well, I don't know enough to know if he's really right about it being a super cycle, but I can certainly see that it's possibility, a strong possibility. Um, and if it is, if we are going to have a commodities super cycle, um, we should be well positioned to take advantage of it. And you might not necessarily, you may or may not, I don't know. Certainly, as a speculator, you can jump on top of that. If markets are going up, it's going to be easier to make money, right? But the real money is going to be with those funds. So it might be a good idea to get in there. Hey, maybe someday we start our own fund. I was actually looking at it, and to do that, you need a Series 3, and I think I could do that. Mm, and that was making me think, remember the other day I was saying maybe I should be taking some days off. I'm really strongly starting to consider that more. Um the only thing is like I hate it when like the schedule is inconsistent, So maybe that just means that I do on Mondays we do more work stuff here and I'll just do it on stream. That could be. I don't know. Swing with micros and scalp with minis. I do kind of wonder if a part of the reason why the CME has made this push or started to realize that micros were really good and so they added them even for the micro treasuries was so that more retail people had the ability to swing trade. I do think that that's probably a major factor. Yeah. I know it kind of brings me back to that thing that I was saying yesterday. Like, probably very, very few retail traders are making money trying to be market makers or scalping. And I don't think that it's a good thing that the robots are completely dominate that field. So if we really want to get more retail traders into it, um, we need to give them a handicap. I think that we should give the retail traders a handicap. I don't know if the CME would see it that way, but that's I'm kind of leaning towards that. And the handicap I think we could give retail traders that would make a big difference is putting them at the front of the queue. Don't you think that would make a big difference? I don't know. Okay, well, they are still coming back. I don't know if they're going to come all the way back though. On that read on that large order was real. I really got that one right. I'm really happy I did it that way, even though it ended up not being a trade, right? But we definitely interpreted that one correctly. The impact that it would have on the liquidity and everything, and that it, in that context, it was kind of weird and shouldn't be happening. So that was a good call, and that was stuff that we would only know with what we've learned about stylized market behaviors, right? Have on my camera here, I've got the screen flipped out, and I had the screen flipped out so I could see myself, but it was just distracting me. I wasn't looking at the camera lens. I was looking at the screen, so I decided to just flip it around. Mm-hmm. Oh, what do you got here, Gus? Mm-hmm. Oh, he's got the book. He's got the book. It's a good book, man. It's a rough book, I gotta tell you. It is not a book that, like most retail trading books are as like a casual sort of you know, you just sit and read it sort of a thing, right? But that book, that is a book that I would get like a I would go to Walmart and get a notebook with like graph paper in it or something, and I would like take notes as I read it, because it's complicated math, right? How's it going, AO? I haven't seen you for a few days. Retail are the pawns. This is true. But I don't think that that's the intention, though. Like, I something I find really interesting, and I see this over and over and over again. People will allege there's a conspiracy, but you got to understand that if incentives and market, or in this case microstructure, but let's just say structure of the thing in general, if the incentives and structure of the thing in general are a certain way, people will behave in a certain way that coordination could never accomplish. Can be better than coordination. But I don't think that the market was set up and structured, at least not by the exchange, intentionally to screw over retail traders. I think that what happened was the big players went and tried to make a market that was favorable to them, and nobody really sat there and thought, okay, but won't this mean that like retail traders will be, become extinct, right? I don't think that was the intention. But that's where I'm kind of thinking, like, like going to the front of the queue, that is a big advantage. Okay. If you're a retail trader, and there'd have to be limitations, like you can't be trading more than X size or whatever the deal is. And that would limit the number of people. Would the big institutions be that opposed to it? Right? Giving them that kind of a handicap. I think it could be. And I think that especially for futures, that it could be looked at as a big positive, because especially for the exchange, because that might increase, it might get a lot more people interested in trading futures, just like the micros got a lot more people interested in trading futures. You're back at work? 2,000 contracts in the ES is I don't know what the rules are on that. There are position limits. But or is it that if you're trading more than 2,000 contracts, you have to pay the professional fee? Is that what you're saying? Retail well, they get massacred. I would rather be at the front than at the back. I would rather be at the front than at the back. It would actually like allow you to just like straight up front run them in some cases, right? Everyone using Jigsaw has the same. Not quite. So like what I'm getting at is like if I truly wanted to okay, in the early 2000s there was a lot of people. I think that Anthony Crudele is a person that we know that did this, right? He made money market making, and he was the biggest volume trader for the electronic contracts for a few years there, right? And then the robots took over and destroyed him, right? Trading. You could totally get trade 2000 contracts in ES with the meta order, but I would probably should be thinking of it more on like on round turns, right? Like if you're trading up to a certain volume, then you have to start paying the professional fee, and you don't get the handicap anymore. But there's certainly going to be some big players out there that are acquiring large meta orders that are probably even larger than 2000 contracts. Trading 2000, yeah. You don't realize that when these really big players do like a big meta order in the 10-year, you're talking about like 60,000 contracts is going to be like a good sized meta order. I know this because they straight up told me. So I'm kind of looking at it here. One thing we want to remember, I forgot to mention, so there is a 10-year auction today. They did come back. The 30-year though is pushing higher, and so what's happening is though, even though the 10-year kind of pushed back, the 10-year yield is at its lows because the 30-year is shoving it that way. Most of those contracts are long term. I'm not sure if that's true or not. My understanding is still that like 80% of contracts, even in the ES, are closed before the end of the day. Right. But a lot of that are going to be hedges and stuff like that, right? So, anyways, going back to what I was saying is like I think that the game that you want that it would be good for retail traders to be able to play is just being able to make a tick between 20 and 20 half, right? And as it is right now, as a retail trader, you like literally cannot get filled without receiving adverse excursion. Because you're always at the back of the queue, they have to completely trade through the queue for you to make money, right? Being at the front of the queue is a big advantage. And you could do something like say we're trending up, I could just always put myself on the bid there in case somebody hits me, right? That size would move well if you did it all at once, for sure. If you did it all at once. Ever since you started using Jigsaw as a game changer. Yeah, well, and I mean, the thing is that for Jigsaw, for instance, catching the edge, right? You can go and you can put the volume stop in there to try and catch the edge. They maybe in the future they add some things that maybe help you put alligators in a little bit better. But you're not going to be as fast as the robots, right? Like the difference is maybe if you put a limit order at 20, maybe you could be 2000 in line instead of 2500 in line, right? I don't know. So the issue is like the kind of like a discretionary market making, utilizing some sort of a correlation is definitely possible, but it's very competitive, and you kind of have to, for it to really make sense as a retail trader these days, you kind of have to find something that's really inefficient to do it. and you have to take on a lot of risk to do it, right? But if they gave them a handicap, retail traders could do it on the 10-year, right? And I don't think that, I mean, it would be a handicap, but it wouldn't guarantee, I think it would still be really tough to trade. So I don't think it would be the case that like all of the size would go to retail traders or that it would kill the HFT firms. It would, the HFT firms would take a little haircut, but it would be worth it if we got more retail traders trading, right? Well, you're probably talking about something different. But I would just say, consider how much is risk taking a part of your strategy. How big of a sample do you have in your performance, right? I'd love to see if somebody would just show me they're only intraday trading, 5 years worth of results, profitable every year. Nobody's ever shown me that. That would be amazing. I'm sure that they exist out there, but there's probably only a handful of them. What's going on here in Jigsaw? They must be hitting people with the at everyone thing. I don't actually see where they were where they happened. They weren't adding me, were they? There used to be an easy way to see mentions for you. Yeah, it's not. They must have been doing at everyone, and I just can't see it. Just 3 or 4 ticks in the 10-year can be hard sometimes too. Yeah. I guess one thing is that in the micros here, you can get yourself to the front of the queue if you just hold it there. But that's kind of a tough one. Was that you sent me? Oh, you did send me something else, and since I had it open, I didn't see. Is that depth map on the ES shows more resting orders than on MES on the same level? Yeah, they're probably going to be different between the MES and the ES. I've done a little bit of investigation to try and detect differences between them. And there are differences between them. They're really, really interesting. But I wasn't able to pull a straight strategy out of it. I wasn't able to pull a straight strategy out of it. I don't know. The whole thing is that to take this from like a larger perspective about what we're talking about, the market is more statistically efficient than it is informationally efficient. So, but the advantage of a statistical inefficiency is presumably you should be able to trade it more consistently, especially if it's a really short-term inconsistency that happens a lot, right? That's something that you should be able to make a living off of, right? And there are some inefficiencies that we know exist, for instance, like correlations between instruments, so that you can make money over the long run. But because of the queue and everything else, and the speed, the robots basically dominate that arena, and retail traders aren't able to take advantage of them. So making it so that retail traders have more of those edges available to them could potentially lead to, more successful traders that really understand the market, which is what I think you need in the long run, because there's some real problems when robots completely dominate the market. Maybe not everybody will see it that way, though. It's hard but possible, and it's kind of like, well, some of these inefficiencies, you really aren't trying to do certain market making strategies on the 10-year. You're just not gonna. It's just not gonna work unless you can get to the front of the queue. It's just not gonna work. Could there be a possible thing where you just you consistently make 4 ticks? Possible, but show it to me. Show it to me over a year, and then show it to me over 5 years. You think it's possible to get 10 points on the ESD? Well, possible is probably the wrong word, right? Possible is probably the wrong word. like the thing is, if you are speculating, you go for 10 ticks, you probably could, especially if you have a large enough stop. But what would be better is if we had a back test that said, that we can get 10 points on the S&P 500 daily, right? I actually think, though, with indexes, when you start talking about indexes, there's kind of a little bit of a different game that gets involved there, right? Because indexes are really random, right? Indexes are really random. I think I want to go back and do some range studies in ES again, because I've never tried to take it to, okay, here, like we have a histogram and we can see like what the 70 percentile is or whatever, but how do you classify that distribution? Is it an exponential distribution? I think it is, but I don't know how you do that, right? How you say, okay, here's the data and here's how I fit an equation to that data, right? And more importantly, I say, here's how many samples I'm really going to need in order to pull out a statistically significant result. Taleb in his latest video was talking about something like that, but I didn't really understand what he was saying when he said it. But I think that you can go through and like you can look at how often an event is, and that has something to do with how many you need to have and the kind of distribution it is. For 10 points on the ES, you have to get your timing right. Well, but that's what I'm saying is, like, even when it comes to timing, I'm not sure that there's always just going to be a certain amount of noise in the equity indexes. Like, I think that a lot of people are looking for certain kinds of patterns and tendencies in the indexes that are extremely unlikely to exist simply because of its very nature as an index. Right. But on the split side of that, it also maybe explains why you get a lot of people that at least appear on to do well with it. Like there's other streamers in particular that they've made like amazing trades on the indexes, and really what they're doing is they're taking on a lot of risk, and it generally works out, but then 2 or 3 times a year they blow out because of how much risk they're taking on, and then they can just kind of start over again, right? Because if there's a lot of noise in the index, then quantifying what that noise is and trying to take advantage of just that noise, you should be able to make profits in a short term, but in the long term, the fat tails are going to screw you over. And so here's another thing about the statistics. I really should, maybe I should be focused. I got like that book for fundamentals of probability and random processes. I haven't been doing a whole lot of my studying in the evening like I want to, but I was really tired last night after my workout. Maybe today, though. I don't know if I should work out today or if I should do it tomorrow. I think I should do it tomorrow. And I should work on that. But maybe I should get into Taleb's books first, because that maybe seems slightly more pertinent to some of the things that we've been looking at lately. FTH says yes, they trade the noise. So like the one that bothers me in particular is the people saying, okay, you want to go and look at what is the average rotation in the in the index, and then, you know, if we're past that rotation, then fade it, sort of a thing, right? Like that could be an edge for you. And I'm like, that has absolutely no discussion involved in terms of how big of a stop you have to hold on to it, or the nature of fat tails, right? And the thing that I've found with that is it's not just that they have fat tails. It's that those outlier data points are also clustered. It's like when you get an outlier, you're more likely to get another outlier, you know, soon. They cluster. And I don't know how in statistics do you quantify that sort of a thing, right? I can quantify it if I have a back test, because if I do a back test, then I can go and look at like what is the longest losing streak that you've ever had doing that, right? And that's usually what kills those strategies for me. So I'll go and I'll look at it and I'm like, well, it looks like you can kind of make money, but you had a period where you lost 20 in a row. Right? So you got these people. So the basic gist of it is that we've got a bunch of information being shared around in the retail space that is statistics that are basically naive statistics, because they don't factor in the statistical consequences of fat tails, right? And it's starting to grate on me, because I see it all the time, and I'm like, but it's more complicated than that. I don't know what the math is. I don't know how you deal with it. Taleb's solution is you predict the unpredictable events. I don't know how he does that. I need to do more reading. I need more time. This is what we guys, make sure you go to my last video. Give that video a watch and a like and a comment. And let's get this channel up to a spot. Because I think that we really do provide value. But the sad thing is that the stream provides the most value, but that's also the thing that people are least likely to go and watch, right? That's sad. But hey, we can get this channel to a spot where we can focus on the channel. And that means that not only will we have more time to make content for you guys so that we can talk about strategy and things that are coming up and so forth, but we can do this other research and we can really understand the statistics behind it better and that sort of a thing, right? And I think that's the focus this year. I gotta remember that, because I have a really short attention span, right? If I go away, if I stray away from that, you make sure that I have a really good reason, right? The focus this year is we want to build the channel. We want to build the channel. It's important for us to build the channel. It is now my opinion, we have a moral obligation to build this channel. Nobody else is going to do it. Nobody else is going to find this information it's information. I used to think, well, yeah, but once you find that information, you want to keep it to yourself. No, I'm learning that our society needs this information. It is imperative for the survival of our civilization. I straight up believe that. Um, the market is not efficient. We are making a lot of decisions these days based on a very flawed understanding of statistics, and uh, we as a society need to understand these issues more and change our decision making accordingly if we're ever going to be competitive with um, an entity like China, because China is going to have a larger economy than us. They are. uh, it's just the way that it is because they have more people. Uh, so how do you compete in that situation, right? Like right now, the world resolves around the United States because of our military and everything, but China is going to try and eliminate that as well. And quite frankly, China has been doing things. They try and undermine us, right? Like they're using social media and so forth to really undermine people's confidence and create division and so forth. It's a real problem, right? And when we have markets that are inefficient and people don't understand that, that just creates more opportunities for them to screw us over and you know trap people into ideas that will waste our time as a society, right? Because how are we going to compete with China if are going to be smaller? We're going to have to be better, right? We're going to have to be more efficient. We're going to have to be smarter. And that's why we need to understand this stuff. That's why more than just us need to understand it, right? That the average person needs to understand on some level that markets are more statistically efficient than they are informationally efficient. That's the big one in particular that we need to get out. That's the focus this year. And if we can build the channel up to a point where we can spend more time getting that message out and learning more about the statistics and stuff, that will, I think we could make a big impact. Do. So I know it sounds a little crazy to be saying like the fate of the world depends on it, but like uh, I don't think that people realize the impact that they can have on things. When I worked for Goldman, that was kind of always a thing. I guess maybe part of this is coming from what they taught. I have to say, I really liked working there, and I did enjoy the culture, even though it was kind of a little cutthroat, and in the end, maybe too stressful for me. But there was always a way to find that what you were doing had an impact. What I did there was what did have an impact. We made markets safer. There was problems. There was a couple of situations where it led to like a big problem, and they haven't had a problem with that since because we fixed it. We fixed it, and we made testing tools that really allowed them to truly verify what their systems were doing. It was good. We made systems that truly really helped them keep an eye on the trades and not only manage a risk but catch misbehaving robots or rogue traders. It was important. It was important stuff that we did, and nobody will ever necessarily see it, but those of us that were involved, we know what we did, right? We know what we did. Um, or like there have been situations where um, you know, I'll see a public discussion about something and I can see a point that people are missing. And so I'll start posting about it. And over a period of a couple of months, I'll see people come up with those ideas. And it's been in situations where like I guarantee you like nobody else was saying it and before I did. Like I don't think that people realize you can go on the internet and start saying something, and even if only a few hundred or even a few dozen people read it, That idea is in their head, and then maybe next time that issue comes up, they say something about it, and the idea just kind of spreads. I don't think that people realize the impact that one individual sharing their ideas can have. Well, the treasuries did move back up a little bit. They moved back to like the hole. So I'm not so sure that I would really want to be in a position here. I don't know if they're going to give us another chance though. The average person doesn't care yet. They will. I guarantee you they will. Like this is the thing is that the average person does care. The average person like hold on, I need water here. What we've seen in the past 2 years in cultural movements, and particularly as it relates to the markets, is the average person kind of coming to the realization that um, what we've been taught about markets doesn't necessarily match up. If the market is so efficient, then what's with all this bullcrap? Why are there these people that make so much money when they're not really contributing anything? Why do we get involved in these investments or going down these tracks that are just completely dumb, right? And the problem is that nobody is willing to really challenge the orthodoxy, right? And not only that, but that orthodoxy is kind of reinforced by our psychology. As humans, we want to look for patterns, and we want to believe that I can look at the markets and find a pattern that will effectively predict it, and I can make money off of that. And then on top of all of that, we kind of have these, you know, fairy tales of sorts. We have situations where people did make money from it, but they were very short lived, right? So we kind of have all of these myths that kind of support the idea that you can do this, right? So nobody's willing to challenge it. But once this idea that the markets are more statistically efficient than they are informationally efficient kind of gets out, and it's not going to be everybody, but it's definitely going to be hopefully among market practitioners, right? I think that that's going to have a big effect on people. What do you make of Bookmap software? So Bookmap has a really cool looking Vista chart. You know, I have my Vista chart up in the upper right. Theirs is better. I wouldn't say that like if you have Bookmap and their tool is so great and you can make money. It's certainly not the case. A lot of the things that are like in the visual charts, I think, are kind of cool, but aren't actually as useful as people think they are. For me, I much prefer to see these things happening directly on the depth of market. Bookmark has a depth of market that is okay, but it's definitely not as good as Jigsaw. I also don't think that the software, like the engineering and the team behind it, is as good as Jigsaw. So I'm not gonna say that you're making a bad choice if you go with Jigsaw, or sorry, if you go with Bookmap. It's not like you're making the wrong choice, but I do think that Jigsaw is better. Yeah. I guess was saying he was using Bookmap there. He was showing me some screenshots. I'm wondering what's been wrong with his Jigsaw. He says that his Jigsaw is having problems, which is like a problem on that level. It seems awfully unusual. Yeah, no problem. I'm gonna say one of the things that bothers. So here's the thing that grates my nerves when it comes to software right now. Okay, Bookmap, MotiveWave, and what's the other one? ATAS. I think ATAS is as well. Java. I'm not a fan of developing things in Java, to be honest. It's kind of become an industry standard. Like it's really common among people and everything. But if you're picking like a new language, trying to find the right language suited to the particular task, and especially you're making a Windows application, it is not Java. Okay. Now Jigsaw is made in C#, but they've gone in and they've had to make optimizations in certain places. I don't think people realize that the DOM that you've got here and how performant and responsive it is not an easy feat. I dealt with that when I was at Goldman Sachs. It's the whole data grid thing is a complicated issue, and they pulled it off very, very well. And I wouldn't be surprised if there's some DLLs involved in there, right? But when you get into Java, it's just like, ugh. And then I have to develop in Java. Yuck. Don't want to do it. You know, why wouldn't you, if you're going to make a new platform, why wouldn't you make it in C# or sorry, C++ or Rust? It's harder. I don't know. Or if you're going to make a platform and your focus was on automated trading, because I think that that's one of the big advantages of NinjaTrader at the very least, why wouldn't you make it so that you can interface with Python? They don't do that, right? I don't think that anybody is completely... I have some ideas for my own platform. That's another thing that I would really like to do, but we're a long ways from that, right? We're a long ways from making our own platform. I would love to make my own platform, though. I have a couple of ideas. I really think I could do it better. There's a lot of features that I think would make a big difference for people that I'm not really seeing on any platform. Some of them will kind of get a hint of it and put it in there, but not take the feature all the way. And none of them have like all of these features, right? Like being able to interface with Python is a big one. Maybe Jigsaw does that. They're kind of hinting at something, and I kind of suspect that maybe it would allow you to do stuff with Python. Another one is like dealing with synthetic instruments. A couple of platforms have kind of done hints of that sort of thing, but not completely. Like what if in Jigsaw, for instance, you could have a DOM set up that would show you the order flow in ES, but the entries that you're putting in are from MES. And the DOM would actually show you the differences between the two of them. Like the prices here would be colored differently if there was a change between them. So that I could sit here and I could just wait for the colors, and I could see, okay, if I see a little bit of a flash of bright blue here, then that means that the micro future is lower than the regular future, and I can try and buy it there. You know, that sort of a thing. Or, you know, spreads, dollar index, that sort of a thing, right? There could be a lot done on that front. So I'm just watching here. The 10-year did come up a little bit, but like, look, we're still at 1.73. So not sure what to do about that. And we are right after the equities open. So guess I'll try one. I do want to be long in equities overall, but I'm not sure if this is the right spot. Not sure if this is the right spot. By the way, how are we doing? So yesterday we were talking a little bit about the title and everything else. And I made a couple of changes to the title that I think make a difference. So we should put CPI in there. Probably it's not something that we're going to see directly on here. I'm working on a thumbnail. I think I want to take a new picture for the thumbnail. I had some ideas about the thumbnail. So really, what makes our stream different? Order flow, showing the DOM, we trade bonds, and we focus on informed trading. Those are the three things that make our stream unique, right? And I'm trying to think, how do I put that in the thumbnail, right? The informed trading part is really hard. I'm thinking what I'm gonna do. Man, they puked. They somebody really shat the bed there. I'll put one right there. I was thinking I'm just gonna put informed day trading in the thumbnail, the words, maybe. Because I can't how do you graphically show that this is for informed trading, right? But I do want to have like the DOM a little bit more clearly in there. And how do I do interest rates? I don't know. It's in the title, but what I think we can change. So I'm looking at it like there are some channels out there that there are some streams that have really leapfrogged us, right? And there's reasons why they've been able to do that, right? So if I'm not willing to do those things, or I'm in showing something that's maybe not necessarily as popular, how do I compete? Well, we're gonna have to be smarter, right? But I think we can do that. And I think that we can have a better thumbnail. For instance, thumbnail will only go so far, but we can get the best thumbnail we can get, right? Okay, so the delta on that cell in ES is a little scary. Wouldn't you say? Wouldn't you say? A little scary, the delta that came through there in ES. Oh, okay. Here's his errors that Gus is getting. Oh, that is interesting. H2 is March. And just verify H is March, right? CMA calendar codes. I'm pretty sure that for the ones that are like weird are the quarterly ones, and H is March. March is H, yes. H2 would be 2022. And how are you trying to connect to it? Are you connecting to your data provider directly? Are you going through the Rhythmic bridge? Are you sure that you're actually connected at all when you do that? See, it says connection is not connected or expired. That kind of suggests that Jigsaw doesn't think it's connected to any data feed at the moment. Wait, what's going on with Coinbase here? This year, we're experimenting with 4 recharge weeks, roughly 1 per quarter, when nearly the entire company will shut down so we can all enjoy downtime without work piling up. 4 weeks of coordinated recharge time might sound like a lot of time off for a company in hypergrowth, but given the intensity of our work throughout the year, we think this is the best way to ensure our basis is that. What the hell? You're an exchange? You're going to shut down for a whole week and you can do that 4 times a year? What the hell? What is going on over at Coinbase? Okay, that was a little bit better of an excursion back there in the treasury. They kind of leapfrogged that one. You see at 19, hardly any, or at 19.5, hardly any traded. They just shot down through there. Oh, that is so weird. Is that so where else are we going to be seeing that? Let's see here. Barrett says inflation beats and bonds go bid. This price action tells you the short bond trade for higher yields is full. Equity indices to rally. Today is last remaining shorts forced out. I'm wondering also how much of that action in the 20 areas is because of the auction? It is. Let me make sure I got my. Every time I say something, yeah, we got an action today, though. Well, that's Nassim Takin. He's been quite active on Twitter lately. He's been doing a bunch of big, long threads and stuff. Let's see here. What's he saying? Statistics, state worshippers, and libertarians are utopians in the same pathological way, sharing a fortune cookie representation of the world, life, history, and the future, with identical blindness to details and mechanisms. The same applies to academic IYIs, wokes, and cryptotopianists. What is an IYI? India Youth Institute. If you're interested, I don't know what he's talking about. Oh, my feed reset. I hate it when that happens. Generally, though, I think he's probably right. I think that there's a lot of people that have this like utopian vision of the world that in a pathological way. Like, but it's the same thing like on the capitalist side. I think that there are people that have a utopian vision of a capitalism that it is just not the reality. Don't get me wrong. Capitalism is the best system because it gives the most freedom. But there are inefficiencies in how our current markets work that we really need to look at. And people are like willfully blind because they don't want to consider that there are problems there. Goes against what they've been taught. And let's see here. As they say, science is hard, more difficult from the inside than it is from the outside. The same with probability decisions in business. And of course, the same with governance and public matters. The problem is abstraction. To see how ill-defined freedom is by naive libertarians, should I be free to drive counterflow? Wrong way, a huge 12-wheeler truck at its maximum speed on my highway of choice. And is it government coercion and power grab that is preventing us from doing it? No. Yeah. Libertarians, I gotta say, some libertarians have dumb ideas. Okay. To see the confusion in the field, some libertarians, like the sucker below, are in fact anarcho capitalists with a focus on property rights. What this has to do with masks, testing, mandates, coercion, and no aggression principles shows their mess. Let's see here. Drew Hancock. Libertarians define freedom in terms of property rights, not I can do whatever I want, whenever and wherever I want now. Okay. The pandemic showed that the non aggression principle is ill defined, breaks down under scaling. Groups are not naive sum of individuals. Most libertarian writing is literature for children, simplified too many steps, only works for isolated hunters and without interaction. Yes. Well, you know what I think happens is that some people, their political ideology um, limits them from ever getting to the logistical stage of things because they're too concerned about the overall structure of the system that they're never able to think about, okay, but if we actually did things the way that I wanted to do them, what would be the logistics of that? I have to say that was a pretty big decline there in the treasuries, wasn't it? Well, let's see what they make of this spot here. I'm trying to write a tweet here and I'm not sure how to phrase this. There we go. Okay, so I don't know why my data feed resetting there. That's okay. Treasuries taking another little step down there. There was some volume in the 18-17 area. I'm a little very interesting. I should note this might be a spread trade coming in here, because I definitely see the volume in the 10 and the 30, but not in the 5. Not really in the 5. And the 30 definitely came down more. So does that mean it's a steepener? Well, we flattened quite a bit after the news, right? So this could be mean reversion still. Mean reversion of the spreads. Shiba Inu Robinhood listing said to come as early as February. Jeez, I can't believe that they're even allowing that. Yeah, they'll take whatever they can get, won't they? Shiba Inu is just like a blatant cash grab, and I just can't believe that anybody gives that the time of day. I'd just like to say I love oil. Oil sure is looking good today, isn't it? Oil sure is. Actually, we should come over and look at our little oil position here, because message retracted. What? See, you guys, if you want to you can't retract your message, because I'm gonna read it out before you do that, you know. Today's gain isn't actually much, but is that because some of my other ones are down? Probably. Okay. Yeah. Oil is up pretty big from yesterday, but from the beginning of yesterday, but like the overnight one is just teeny tiny little change. the way there was a bunch of spelling errors in his GT350's response to that. Right? Are you on a phone? That message looks like it came from a phone to me. That happens to me too. It's like anytime you're trying to actually do something fast, the phone's auto spelling thing just completely breaks down and puts the wrong words in everywhere. It's retarded. Yeah. Yes, sir. Yeah. That's funny, man. Okay, well, ES is doing not so bad. Oh, I should have. Well, when I originally took that trade in the ES, I was like, let's shoot for the moon again. But it's been a tough first 30 minutes, so I'm gonna take a sequential profit here, if it'll let me. A sequential profit to justify the amount of risk that I took on, and I'm wondering, though, there might be some correlations going on here with equities. By the way, how is oil doing here after all of this, huh? It looks like they took a little bit of a jump up on the initial report and are maybe headed higher. Interesting. Very interesting. Bitcoin has hardly. Well, actually, no. Bitcoin went a little bit higher. Bitcoin's up another $1,000 or so. Hmm. When I look at this, I'm kind of getting some moves and spots that like I'm kind of keeping an eye on. That kind of makes it seem like something's going on. But when I look at the overall market volume, I'm not 100% sure that there actually is anything happening. It may be a little bit too early still. Well, see, now that was a change there in the treasury. So that was not, it was a continuation of the short flow. I think I need to bail on that. I wonder though, I mean, we're definitely getting some volume coming out on the downside, especially in the 30 year. I still feel like it's probably a spread trade. It's interesting to me though, like the market makers seem to be pulling out of the way more so than anything. Now that we're back at 16, like that's the news price. So I don't know about that one. That'd be awfully interesting if they went down to the lows, huh? That's very possible here. Maybe some pushback right there. White House Advisor D's, we need to increase the economy's productive capacity. Yes, you're right. Well, let's I don't want like dead air, but I'm trying to focus really hard here and see what they're doing. Because we may get an opportunity to do something here. And I think that if we do, they might not give us much time to do it. I suppose that we probably already missed the long, like it should have been going long here. I guess one of the problems is on the long side is that I think that the orders that we saw come in going long make sense off of the news, but I'm not sure that they make sense for them to continue through the session other than just because of trend and whatnot. So now that we've come back, I think that that kind of negates things and puts me much more in a questionable area of do I want to go long or short here? And seeing the way that the volume came in, it makes me think that we are getting a meta order short and that we could revisit the lows in the treasury. And especially with the way that the spread is going. Well, I missed an opportunity right there. So they're hitting into 16, but there's an iceberg there. So it kind of looks like there's a pretty good meta order there, huh? Well, they did clear it. When I see something like that, it always makes me want to do something, but usually what we want to do is kind of wait and let it chill out. So let's say 15 minutes. Let's give it 15 minutes. Hmm. So now this spread is kind of evening off, at least on the 30-year end of the curve. I'm still seeing the steepening coming in the 10 and the 2. Oh, good. The equities kind of gave me my... All right, that's cool. I like that. Okay. That's a good spot to just try and hold it. Trying to sort this puzzle out. I really want to do something here, but now the more I think about it, the more unsure I am. Kind of looks to me like that meta order is done, though. So let's put a little test out here. Hmm. We may be getting the post meta order regime change here. I'm not sure. We did have a good uptick there, but then it came back down very easily. So the moment they kind of look a little directionless. Okay. So there's a tick up. The 5-year actually led that one, interestingly enough. Well, actually, not interestingly enough. That means more steepening, right? Hmm. Yeah. And you see the 10 years ticking back and forth there, but the 5 years not. Of course, there's been volume on both sides here in the 5-year, and both sides of that book are absorbing. So It looks like there's some trade going on here in the 5-year. Curious. Okay, so they did uptick, but they were a little bit reluctant to take out that. That was like an as she goes, really clear as she goes opportunity there, and they were reluctant to take it. Well, that's a little bit more like what we were anticipating. Oh, President Biden says, but get vaccinated, get boosted, and wear a mask. We will get through this together. Thanks, Biden. I feel so much better. Gonna get through it together, guys. Oh, that just reminds me of the Project Veritas video yesterday. I don't know if I want to talk about that. Here's what I'll say about it. It's a really weird story to me. I think that it's probably something that we shouldn't be making. Like, a bunch of people are making these big conclusions and accusations now off of what was released by Project Veritas yesterday. I think this is one that we should let stew for a little bit, because I'm gonna bet you there's more coming. There were specific people named in that report. Let's hear from them first. Okay. So if this is just the post meta order regime change, that might have been, you might settle here. We may, though, still be seeing some sort of a spread trade meta order come through. So we'll see if we continue to see buying orders. Okay, well, there's a pretty good buy order right there in the 5-year, right? Bloomberg says the most U.S. inflation in 4 decades is reviving talk of Bitcoin being a hedge against rising prices and is lifting the coin to its highest in the week. Yeah, see, it's just like I said. It's like it doesn't matter what happens. Bitcoin buys on it. It's a hedge. It's a hedge, even though the markets were all relieved by the thing and the treasury yields are declining, but we still need to hedge ourselves. It's kind of doesn't make sense with the correlations, but it makes sense from a position of where do new orders come in. Anybody that's looking at Bitcoin is thinking, I want to protect myself against inflation. The fact that CPI came out today, regardless of what it was, they're thinking I'm scared about inflation, and so the orders come in that way, even though, it kind of is nonsensical from the perspective of the macroeconomic framework that we usually work with. Tell you what, the realization that orders move markets and that you need to predict the orders is so key. Is so key. All of the conundrums and contradictions in finance that I'm aware of, at least, and I'm sure that will come into more confusing things in the future. But that is such a big step. So the order flow driven theory of markets, as opposed to the efficient market hypothesis. The top 20 best places to work. Delta is one of the top 20? Really? Maybe I should tell my wife it's time to go and work for the main line. Wow, 49-year-old man shot in Tooele? What? Equities heading higher here. Actually, that little push higher looks really nice. Let's see here. Okay, so we're retracing the move from the hawkish FOMC minutes. One location above us is 4761. There's an area that we might want to keep an eye on. What does volatility tell us? This is starting to look more and more like that post-meta order regime change. Maybe we may still see some buying coming into the 5-year, though. Should keep an eye on that, right? Okay, what else we got above us? 4749 is step 1, and 72 is step 2. I don't think we get to 72. Okay. That bid recovers really. Oh, well, okay. Yeah, that bid at 24 seems to recover pretty well in the 5-year, but Forex Live says euro breaks out of the range. The dollar is getting weak here. It may be possible that the dollar breaks 95 here in this session. If that continues to happen, though, that should probably be good for our treasury trade, because that means that we'll continue to see the 6J strengthen and the treasuries move up. It seems like there's a little bit of buying pressure there, but it's not super clear yet. It's not clear enough that, you know, they're going to be able to push to higher highs. Brannigan, oh, interesting. I was asked at the start of the year if I think where gold is headed. Simple answer, lower. If 2021 proved anything, it's that gold is sensitive to real rates and not much else. We can see impact over the past year of the 4 occasions real rates rose. What is interesting is last move in real rates hasn't yet had a move in gold. I think the reason for this is simple. At the start of the year, bonds sold off and equities sold off, so there's no safe haven for cash. Gold was the safe haven. Now that equities and bonds are bouncing, I think once rates settle, gold will unwind those hedges and trade towards last year's low of 1720 in a hurry. Possible. Gold is doing okay today. It seems like their ability to hold 18K is, you know, they seem to be doing pretty good with that. But you got to be suspicious, because every time that we think in gold that things are coming along for them, they get smacked down, right? It is a little curious to me that through all of this that gold is coming up a little bit, but I guess it's interest rates declined a little bit, so maybe that's why gold did that. Hmm. So there's the 5-year making another push. Yeah. It's really slow. This is maybe kind of becoming a bubble up move. That might be what's going on here. I guess, well, I don't know. Well, when I look at the cumulative delta, it's mostly flat through here as we've risen up. So that is still kind of, to me, like post mid order regime change. When I'm watching it, though, the sell orders aren't making any progress. It's the buy orders that have been making progress. It's just like really slow. So it kind of almost looks like a bubble up kind of a move. Yeah. Now, the other thing, though, is that the spread flipped back around. Now, how is that the case? Oh, it flipped back around in the 2s and 10s. Okay. Well, I don't have the 2s up here, but something's going on in the 2s, apparently. But between the 5 and 30s, it's still steepening gradually. Who dares knock my door this early morning? I'm going to go see. Okay, so the 5-year was kind of pushing things up there, and well, the 10 may be able to recover like the 20 here, but you know, kind of looks like maybe there was some market orders pushing in there that maybe got ahead of themselves a little bit. But I suppose that if we are seeing a bubble up move, that might be consistent with that, because when you get a bubble up move, you know, you often see a lot of guys like getting the false starts and stuff. Not 17.5 pulling there is not what you want. That's some more spreading going on. The 30-year ticked down. Even though it does look like the 6J is continuing. Well, the 6J did come back a little bit, but oh, that's right. Crude oil inventory is coming up. Man, if they get a draw in oil, that could be a little wild, right? Hmm. Oof. Okay, so I'm not sure if that last downtick is still consistent with the flow that we're expecting there, because um so we get post impact meta order, that settles, then maybe we see another meta order pushing up. But some of those bids kind of hold on us a little bit. So it kind of feels like the market maker is maybe being a little tricky, or maybe there's even some people trying to shove it down. 30-year in particular looks really heavy. Mhm. See, in that time, 30-year tick down again. Okay. 5 years still gonna push, huh? Ooh, look at that. Yeah. Okay. Hmm. I'm noticing a couple changes in here. We are kind of like in that reversal time period. The E-mini kind of looks like maybe they're going flat, and then here in like 30 minutes or so, maybe they make another move, or maybe they wait until the European close. The treasuries, we're getting Definitely some of this spreading action still, but there's some weird things now happening at 18 and 17.5. That offer there is being a little stubborn. They're trying to scare it out and it's not going. But you can see that the bid is willing to take it on. And the 30-year ticked down again. Mm. Maybe some signs here though that there is in fact a buyer coming in after that post meta order sell. There was the sell, post meta order. Maybe we are getting a buyer here. Well, let's not say maybe. There was some degree of buyer there, right? Hmm. Yeah. So there was opportunity for them to catch the edge there, and the sellers were very reluctant to take it. And eventually they kind of swept into it, and then the buyer immediately ticked it back up. So that's why you see even when it's like 300, it seems like they're reluctant to hit it. It's because of that. And then you can see in the 5-year that the bid offer is, of course they're going to have to take out that offer, but the bid is relatively strong there. But the 30-year would need to tick up too for this to really go anywhere, huh? Well, 5-year takes another uptick. Still not convincing the 30-year to play along, though. There's not much volume going through in the 30 right now at all, in fact. They're actually maybe seeing a recovery in the dollar, too. Well, they could be waiting for oil. Okay, here we go for oil. Okay. Gasoline inventory is a lot higher than anticipated. And crude oil inventories, though, was a bit much, negative 4.55 versus an expected negative 1.85. So that should shoot oil up, right? Yeah, they're moving up a little bit. Not super strong, but they're moving up a little bit. And I don't know what that's going to do to the currencies here, but the treasuries, the 30-year is still down in there. My news squawk just did a little glitch there. Ouch. Mm-mm-mm. Okay, they let me out of that one. That's scratch. I think for me, that's probably it for today. So I lost $5. Yeah. No, that's not right. Yes, I lost $5. Actually, $4, but then commissions. So I don't know if, like, given the situation, that it makes much sense for me to try and take another trade, even though I do see the possibility that they could totally come in and hit it, but I'm just not seeing the orders I should. I probably, when I had the chance to maybe take it off at $7, I should have, because that would have just been the post meta order impact that we were expecting, right? I suppose, though, if I'm only expecting post meta order regime change, maybe I shouldn't even be taking a trade off of that in the treasury. Maybe there's just not enough there to make money from it. Glad I'm out, though. They are moving a little bit lower. It's actually some strong selling there. Well, the 30-year really pushed lower, right? Maybe somebody thinks that the report was hawkish and they're trying to reverse this. If that happens, how did the treasuries react? Or sorry, if that happens, how do the equities react? That could happen. We should keep an eye out here. You know what? I'm kind of sick of this one. I should have gotten out of that a long time ago. But we should keep an eye on this. If they come somewhere down into like this 20 area. So if we see the treasuries continue to sell and the equities drop down into the 4720 area, I think that they could probably head to 4700 again. Hmm. That's some decent sell volume there in the 10-year. It is absorbing there at that price, though. Like, if I really still believed in the long side, I think I'd be buying it there. Well, now that I got out of ES, they're kind of flipping back up again, huh? I was just frustrated with that one because I wasn't really focused on it. It was just kind of like a side piece, and I really should have managed that better up there, and it didn't. So I was like, let's get out of it to not worry about it. Kind of makes you wonder with the way that that has gone through. That suggests anything for the auction. 1.75 in the 10-year is an awfully round number, don't you think? Don't you think? How we doing over here, by the way? We're okay. We're good. Just quiet. You probably were all hyper focused on it like I was there. ES, especially if you're in ES, because that still kind of feels like ES could do something, right? What the hell? I'm deleting all this. Somebody came in the Discord and they're like, some nobody asked a question and then some other nobody answered it. That seems to me like a really clear marketing effort. Yeah, I'm kind of thinking. I don't know if I can really justify this trade, but here's my theory. Here's my theory. The 10-year auction isn't going to go well. That's my theory. My theory is the 10-year auction isn't going to go well, and that rates are going to come back up here. I don't know. So we dropped back down to here at the 16. It wouldn't be a bad idea to buy it here again, like I was saying. But I don't know, man. It's just there's kind of some weird flows going on here, and um, the macroeconomic context is pretty complicated, you know. So I'm not entirely sure. There was a pretty strong buy here though. Like they hit lots of buys into that 16.5. Oh, I tell you what though, if they get smacked down again and they fell 15.5, they might have to come down a bit more. And like I said, we are right at the news price that we were at before CPI. So if you think that yields should decline off of that CPI report, then I think you want to defend this area and buy it, right? But there's enough room in this to take the position that the move was wrong and that rates need to rise. Looks like buyers have it. Actually, across the board too. And my treasury or my ES trade hit in. Now some of that, well, now we have to consider the risk off flow potentially, right? The way this is turning out for ES, though, is not looking particularly great, is it? Well, at the current moment in ES, I think I want to try and leverage my better position. We could try hitting into it, but this looks a little messy. This looks a little messy, and especially since the treasuries are being a little, should we call it confusing? Yeah, I'm having a hard time sorting out what's going on there. I think we understood that sell and that return back. Hey, even this return back down to the lows could just be like within the range. But then we're seeing some volume in here. So I'm not sure what to make of that. Seeing some volume in here, and it looks like they're buying it back up, right? Even the 30-year is coming along this time. Well, although the 30-year is just right at 156, which is kind of where it was. So, and they're hitting into some critical levels here now in ES. Like it's not. If they breach 4,700, I kind of wonder what kind of chaos that might unleash. And again, is this buying coming into the treasuries because of risk off? No. So let's recall here at the top of the hour. Okay, yeah. So they sat around for oh yeah, 8:30 was the distillate. So that move in the treasuries when we came back down may have been because of oil. Like if the draw in oil was heavier than anticipated, that suggests that we could continue to see some inflation in oil, and so you would sell the treasuries because of that. That might justify that move. That might have been why we saw some of that flow come in, but it was awfully tiny, and this buy that we've seen since is a lot bigger. Hmm. Yeah, the S&P are trading some pretty wild candles here. Why don't we just try and take a quick profit on that? Since that's the major thing I've got going on right now. I like to just go and put something in the ES and then forget about it. But like if we're gonna focus on the ES a little bit, let's do it right and get the 10 points if we can. Hmm. 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 Apparently, there is a lawmaker pushing in some laws and stuff regarding central bank digital currency. So that could be interesting. It will the bill. It's Emmer is the guy. I introduced a bill today prohibiting the Fed from issuing a CBDC directly to individuals. I think that's a good idea. I mean, it kind of seemed like that's what the Fed wants to do. I don't know. I don't know if that's actually what they want to do. That's what a lot of people have talked about with it, right? It's stimulus directly to the people. I don't know. Any CBDC implemented by the Fed must be open, permissionless, and private. What do you mean by permissionless? But private, yes. I really don't like this idea of being able to track everybody's private transactions. I do like the idea of having metadata in there that allows us to categorize transactions better. I really like that idea. But I shouldn't be able to see everybody's wallets and who you're transacting with and stuff. That's no good. Okay, that move that we had coming up in the treasury has pulled back a little bit too. So I don't know. So one thing is that decline that we saw in the treasuries, that could be kind of also a little bit of a post meta order regime change, or just like a snapback. So if that is the case, then the 17.5 is the whole. That's why it was like, they come here to 6 when they were at 16, they could slip back into the hole. That's what they did that one time. That was where we caught a few favorable ticks. But that means that we don't necessarily want to mess with it in this area. Certainly not in the next 10, 15 minutes before we have to go. Yeah, like the whole thing about a CBDC, it kind of excites me, to be honest with you. Like, I know that everybody says this could be an awful weapon used for oppression by the Federal Reserve, or here Emmer saying that it could move the Federal Reserve into becoming basically a commercial bank, a retail bank. That wouldn't be good, right? But at the same time, it seems to me that it's going to happen. It seems to me that it's going to happen. It seems to me that there would be a lot of things that you'd be able to do with it. Like there's all of these use cases for cryptocurrency that are supposedly out there, but you never quite got them. But if it's a currency done by the Fed, then it's definitely going to happen, right? And there's going to be an area of high growth around that, and I want to be a part of that. It seems like a good place to be. Being the CBDC advocate. I think I wish there was more information out there about it so that I could make content about it, or start building things. It's like I want to do something with it, but there's like, what am I supposed to do? Sit here and dream about it. What? Germany raises the prospect of shutting down Telegram for its failure to block hate threats on the platform. Okay. All right, now the E-mini is heading down for another new low, and I'm seeing that risk premium coming back into the treasuries again. 6J hasn't really changed much. Bitcoin definitely turned back down. They're still above the news price. They're still above the CPI price. Ugh. I don't know. If Bitcoin goes back to 4,300 and below that, nah. I think that usually cryptocurrencies will kind of do that sort of thing, and it just ends up being a nothing. So I don't think we should read too much into that, but I guess there is some possibility that they tried to make another attempt at 40K that could surprise people. Ugh. Okay, and I got my target. I decided I wanted to get out and get the $50, right? So that's good. 47.10. Hey, that was actually almost perfect. Thank you, sir. Coming back and getting me, I appreciate it. I appreciate you. Let's just reset things here. So we got about 5 minutes. It's been a quiet second half of the stream, but you know what? I yapped a lot at the beginning of the stream, so I feel you guys. I feel a little sad because it does seem that after going away for the holiday that we lost a few people, right? We got to get him back. Got to get him back, guys. It's a Pelosi track. And the issue that I have with Pelosi track is that everything that you can see about that is like a month old. I feel like that if Nancy Pelosi bought something, that I should be seeing it and be having bought it myself well before it gets reported, you know? Would you rather follow Nancy Pelosi, or would you rather just know what Nancy Pelosi knows? Right? Or know what Nancy Pelosi is going to do before she does it, right? I think that should be the objective should always be predict future orders, right? What does that do? Shows us past orders. Although I suppose the instant that it comes out, you're probably going to see some people trading it, right? Well, let's see here. Let's see the flow. Hunt unusual market. Well, you have to subscribe to see anything. Tickers. And you have to go through on a ticker. Oh, cool. But it shows you dark flow. Pricing. $32 a month. And you get options flow for 42. Super live buffet. Well, it seems like they got a decent pricing set up there and everything. I'm not myself interested in spending that though. Basic materials outperforming today, huh? Hey, let's go and see how our portfolio's doing. And I've been checking it more and more often these days. I guess just because we've been doing well. Just because we've been doing. Yeah, it was unusual well. So that was the website that we were looking at. Oh, there's still a loss today. That's okay. So who's dragging us down today, huh? Goldman. Yeah, no. That's funny though. We've almost the money that we've made on our oil has basically wiped that out. You say it's super cheap for what you get. You're doing stocks. But again, it's past, I don't know. It's like seeing flow as it happens. Let me put it this way. The older the information is, the less valuable it is. Right? like I find this order flow stuff useful because I can walk out a scenario in my mind about a trade that I might think a big player might put on, and how I expect to see that happen on the DOM. And then when I start seeing that happen on the DOM, that means, oh, hey, yeah, maybe I'm right. So as it's happening, it's useful. But I very much try to avoid saying like, oh, okay, there was X thing happened here, so I want to do it, you know? You would sub for real-time options moves. You think crude to $200 a barrel, Tony? Wow. Well, let's just settle for 85 right now, huh? If we could be $85 a barrel by this time next week, I would be quite pleased. Quite pleased. The thing with options is that once you get into options, you can make some pretty complicated you can make some pretty complicated models off of the options, huh? Yeah, by the way, this trade here, like I could have gone short again. The 30-year, the bearishness in the 30-year does seem to have abated a little bit. But overall, it seems awfully stuck. Doesn't seem like the risk anything after the initial move, and then I guess if you had bought way down in here, right? But everything after that, it kind of seems like it wasn't worth being in, right? So to have come through, and hey, actually we got 5 favorable ticks on our good trade, and we only lost $4 on our bad trade. You know, that's actually pretty good trading for today. And then on the ES, we actually got a couple of good trades. That first one, let me show you. That first one that we took, we got 34 favorable ticks, but we should have been like, I don't know. We should be watching it and getting out in spots if we're going to do that, right? So this doesn't seem like it's a trade that we can just wait in all day, right? You can. I bought the whack of oil equities options betting on price. Yeah. Well, I have a position in oil at the moment that's going quite well, but I would like to see it do better. I would like to see $85. Do you think we could get to $85? I mean, the pace that it's been going seems possible. Seems possible. Maybe I need to go back and look at what the options are pricing. But you know what, guys? That is it for us today. I will see you guys tomorrow. Make sure, if you're new, subscribe, click that bell icon. I feel like I've lost a few of you guys over the holidays, but we'll get them back. They'll see we're back and they'll come back. But anyways, I'll see you guys tomorrow. Stay profitable, friends.